Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We begin strong with Sarah Wolfe. Thrilled that she could join us this morning for a briefing into this economic data in PCE. Sarah, I want to get back to first principles. CPI inflation, core CPI, there's business inflation. What is PCE? Why do I need a PCE index if I already have a CPI index?
I love that question. You're really getting down to the basics. So CPI, if we remember from Econ 101, is everything that you pay out of your own pocket. It's your basket of goods that comes out of your wallet. PCE is a more encompassing measure, so it incorporates everything you pay out of pocket and then things that get paid on behalf of you. So think about healthcare insurance. So PCE would capture a larger weight for healthcare insurance. Or think about if you're in the military, the clothing that's purchased for you. And so the Fed does like to look at PCE as the preferred measure because it is a broader measure of inflation.
Is the disinflationary vector broken? Has it snapped to where we're leveling, or can you dare say, give me an inflationary vector before this report?
I mean, we're just at the early days of getting the re-acceleration in inflation. I think that we could agree that, you know, when we thought back to April, when we thought inflation data would start to accelerate off tariffs, we all thought, oh, the summer and then it'll be over. The reality is that what we've heard from earnings from companies is that inventory building was actually a lot stronger in the second quarter, and that's helped keep prices lower through the summer, and that the price pressures are just starting to trickle through right now. We're really going to be getting more of that pressure in the coming months. So we're looking for a 0.3%, which is an acceleration relative to the recent trend, but it's fairly mild. We're going to see that pickup in trend in that 3-month annualized pace, which is going to start to accelerate higher.
Sarah, all morning we've been talking to Meera Chandan at JPMorgan, Winthin. We've been talking to Katie Kaminsky of Alpha Simplex. We've all been talking about the potential for inflation in the U.S. to diverge between Europe, or let's just call it the rest of the world. You know, I'd like to hear your thoughts on that. I mean, should I be buying should I be buying oats, basically French oats, on, you know, some of the things we're seeing between Germany and France here? Obligaciones semejables. Yeah.
What are you saying? Sarah, excuse me here. He's out of control.
Well, somebody's talking in my ear while I'm trying to pronounce them.
Sarah, say
I think you bring up a good point that what's happening with tariffs is twofold. First of all, businesses in the U.S. are having to pay for a lot of these tariffs. So instead of businesses overseas that are exporting to the U.S. taking the burden of the cost, a lot of that is hitting U.S. businesses and in turn getting passed through to consumers. So more of that price effect showing up in the U.S. Add on top of that we've seen a devaluation in the dollar, depreciation. And so that's not helping with the inflation story in the U.S. And actually that depreciation in the dollar is keeping prices lower among our trading partners relative to the U.S.
What's your 12-month forward inflation number, CPI, before we do PCE? What's your statistic 12 months forward?
So 12 months forward, we're looking at inflation that's probably still somewhere around 2.5% to 3%. So we're getting that reacceleration, but it's going to be sticky, I think, coming back down. It's really also going to depend on how much weakening we see in the economy. If we see persistent weakening through 2026, we could get that downward drag coming through the services channel. But I would say more likely than not, we're actually going to be getting some reacceleration in growth going into 2026, just as these prices are picking up because you're getting the one big beautiful bill stimulus, you're getting the AI CapEx story.
But I don't think I've ever seen a survey that matches a study that matches a survey like we've just seen. Sarah Wolfe with us here. Sarah, I don't know if you saw this. Thank you to Bloomberg Television for alerting me on it. But folks, Canada
GDP
came in with stunning statistics. There's no other way to put it. Second quarter Canadian GDP, the forecast was a negative 0.7. And they came in at negative 1.6. They came in with a lesser inflation. Sarah Wolfe, this is a global U.S. inflation report. How does Morgan Stanley see this mixing out in the next 2 or 3 quarters? Is it going to be a global slowdown combined with an America that's resilient?
I mean, the reality is that there's going to be certain economies that are way more affected by U.S. tariffs and the spillover from the slowdown we're seeing in the U.S., Canada being one of the number one countries that are going to be affected as one of our closest trading partners. Over 20% of our exports go to Canada, and way more of Canadian exports go to the U.S. I think somewhere around 80%. And so we're seeing that spillover is going to slow global growth. But I think largely a big hit of it is going to be felt within the U.S., that we are going to bear the brunt of the tariff slowdown because, as I mentioned earlier, businesses in the U.S. are pushing that price through to U.S. consumers and other consumers. So think about in Europe, they're actually getting a deflationary impulse from the slowdown. And so I do think that that's worth noting, that the U.S. is going to slow down, and it's going to take Canada and Mexico probably with it in this economic deceleration.
Well, Sarah, I think you hit the nail on the head here. Listen to this one. Exports on annualized from the U.S. into Canada fell 27% on the quarter. That is a huge, huge miss. And you're seeing dollar CAD rise off the back of this, although not so much, a little bit of spike here. But, talk to us about what this means for the dollar narrative. If you start seeing GDP in some of the U.S.'s largest trading partners coming off to that extent, do you expect the dollar to rally or fall on that news?
I mean, it's all about how we are relative to certain economies. So the U.S. CAD might appreciate, but if we think about the trade that investors are going to be putting on the U.S. euro, for example, that we're still seeing a relatively better situation in Europe. And so there's going to be a little bit more of a diversified trade. There's still room for the dollar to depreciate further as the tariff story starts to materialize. So I wouldn't discount the fact that just because we're getting a bit of a rally in the dollar off of this weaker news in Canada, that that's going to be the new uptrend. I think as we start to get the slower numbers, the weaker numbers coming in from the U.S. paired with a better situation coming in from Europe, so they're going to be able to cut interest rates more, we could get further dollar depreciation.
Sarah, you guys do brilliant work. I mean, the legacy here of Stephen Roach and Richard Berner has been identified, and the Morgan Stanley excellence of Seth Carpenter and all. Great. Do you guys care what the price of beef is at the grocery store?
It matters to the extent that it's hitting consumer wallets. Of course, we like to strip out food and energy and core inflation.
Which drives me nuts. Lisa, can you strip out food and energy over the next month? Come on, Sarah. Nobody except fancy people like you strip out food and energy.
As a consumer economist, I agree with you that food and energy are the most important components that go into the basket when you think about the everyday consumer and how they view prices, right? So if you actually look at what drives inflation expectations, which seems to be the only thing that the Fed really is focused on right now, the number one driver of inflation expectations is retail gas prices and the price of a carton of eggs and a box of milk, because those are the most salient prices. And so you could add on to that other things, other staples people like to buy, like the price of beef. And so if we see an acceleration in these other components, that does start to feed through into inflation expectations and become a real concern for the Fed.
We're commercial free for you into the top of the hour. Michael McKee will join us here in a bit. Yelena Shulyateva will join us as well. But right now, we're looking, it's not a carton of milk. It's like, give me some 1%. I mean, come on, Daniel, Larry Kudlow became famous.
Tom, Sarah and I both strip out tomatoes, onions, and potatoes when we're looking at inflation in India. You have to do it. Yeah, they call them top. It's often referred to as top. Tomatoes, onions, potatoes get stripped right out. But Sarah, I have to ask. Yeah, absolutely.
You're a font of wisdom. We have Sarah's gone.
Sarah's gone. I wouldn't ask her. We can ask Yelena. We can ask Yelena.
Why don't you bring in Yelena Shulyateva here?
Yelena Shulyateva, former Bloomberg colleague of mine. Yelena, welcome to Bloomberg Surveillance. Let's talk a little bit about the inflationary pressures that are emanating from China into the rest of the world. What are your thoughts there?
Well, I think that we can just quickly cover it and all go home because that was largely as expected, right, this report. But seriously speaking, I think that today's report doesn't add much in terms of the new information. We already knew that consumers are still holding up. They are spending on goods. So goods spending increased by 0.9% in July, and we spend less on services. So that is telling me that consumers are becoming more choosy in what they have to spend on. They are stocking up again. Look at the advanced trade report that also came out along with the data on inflation. We saw a huge increase in imports. So I think we have some kind of a deja vu here because, we're stocking up again ahead of the new set of.
Yelena Shulyateva with us with the Conference Board, the senior economist there. Yelena, let me ask a dumb. It's not like Damien would ask this. I'll ask a dumb question. On a scale of 0 to 100, where we say the tariffs have been passed on to the consumer in America, where are we on that continuum? From 0 to 100, are we like at 10, where it's barely in effect, or 50 midpoint, or is there now becoming a huge effect of tariffs on our listeners and viewers?
I think we're in the early stages of that. And Sarah was referring to that as well earlier. I think we're in kind of like a 20 to 30% on that scale, probably. Look at what is happening. So today we get an expiration of the de minimis tariff exemption. So that alone, according to the Conference Board research we published earlier this year, will add a few tenths of a percent to PCE inflation later on this year. I think that is an important thing as well. So I think that, we stocked up inventory with cheaper inventories earlier this year. And now it's just the time when we're going to start seeing inflationary pressures. So I think they will continue to build into the end of the year and going into the next.
Yelena. Sorry about that. Yelena, I know we could stick to the U.S. here, but I'm going to talk about Canada here because this GDP print was pretty surprising to the downside that we just got at 8:30 this morning. And, we're seeing growth kind of, coming in a little bit across the board. And I'm seeing central banks literally across the board from Mexico to the U.K., Poland perhaps next week, the Philippines this week. They're cutting rates. Are we missing something that other countries are seeing? Is growth slowing more quickly in some of these other nations? And is that why the central banks are acting so aggressively?
Well, you have to, when you disrupt the system, and that's what we see, right, with all the new policies and policy actions, something will break somewhere, right? So, and you have to react to that. I just don't think that in terms of the U.S., we are, heading into some kind of a downturn at this point. I think growth in the U.S. is still solid. Despite all the disruptions, and it's a very tough choice for the Fed what to do the next meeting and going forward. We
continue with Yelena Shulyateva, the Conference Board. Bond market showing higher yields, 10-year up a solid 3 basis points, 4.23%. 30-year bond not at 5%, 4.91%. Equities do better than before the 8:30 report, moving from negative 25 futures about now negative 18 futures. The VIX 14.56. With Yelena Shulyateva, Damien Sassar. Damien?
Yeah, so Yelena, look, we've been talking all morning about the impact of inflation on growth, the impact of inflation on pretty much, some of these local economies, not just in the U.S., but abroad. But what I really want to get a sense of, what are you seeing on the ground here? Just real economies, the real purses in the pocketbooks that are being, do you see consumer discretionary spend coming down here in the U.S., or is there potential for it to surprise to the upside still?
I think we see a slowdown, and based on our Conference Board consumer confidence data, you do hear a lot of concerns about inflation and how that will impact consumers going forward. So look at this report again this morning. So services were pretty weak, even though goods spending rebounded from its tepid pace based in the second quarter of this year. So that tells me that, consumers are really facing tough choices. They have to spend more on food and things like that are necessities. And, they have to forego what what could be a discretionary spending, like going to Disney World or other things.
Yelena, thank you so much. Yelena Shulyateva, the conference board with us off this key economic data. I do want to review her. We really focused on PCE. Lisa Mateo with that great effort at 8:30. Personal income came out on plan. I don't have a revised number. Personal spending, I do have a revision. It came in on plan 0.5%, but a more buoyant prior reading of 0.3 moves to 0.4. So again, it's that tendency to that word solid economy. I was on the horse out with Joe and Tracy at Jackson Hole. They got me one of the Clydesdales. Trigger was great. I didn't fall off, which was half the battle. Somebody who actually rides a horse at Jackson Hole and is like gifted. Michael McKee.
Michael McKee.
Head of all of our economics. Before we dance into what we're doing right now, your single vision, your summary of your effort out west this summer.
It was quite interesting and also somewhat unnerving because there was this palpable sense of worry about what's going on with Fed independence. And then, of course, Tom, as you saw, there was a massive security presence there.
Massive security presence, but the unnerving part into September, October, November, what are you watching in the data that leans to a study of that unnerving?
Well, if we're talking about it in that sense, we're talking about what the Fed is going to do at their September, November, December meetings. And in this case, we're looking at the inflation numbers and the jobs numbers. And it was interesting to hear Chris Waller last night suggest in a footnote that they're also following the ADP numbers, and they have shown deterioration. They get the ADP numbers on a weekly basis and use them to form their own index. And they have been deteriorating since the last jobs report.
And this is Waller's wheelhouse. When we started, Damien, with this was a question about Mr. Waller. Now, he's popping 50 beeps talk back down to 25 basis point. With this economic study this morning, it screams moderation by the Fed, doesn't it?
Not necessarily.
I got that wrong. Damien, please.
Well, I mean,
what we do see is some spending increase on automobiles drove much of the increase overall, and automobile spending is expected to drop off some because the tariffs are going into effect, and the auto companies have said they're going to be raising prices once we get to the 2026 model year. Now, I don't know exactly what that means, but you two are old enough like me to know that it was always when the football season started, they started the new car ads for the new year. So somewhere around this time.
Well, you know what, Mike, here's the thing. I'm looking at the PCE data. I'm looking at yesterday's GDP data, and it's all on the screws. There's no news here. There's nothing really here. What I want to ask you is, let's look forward 1 week from today when NFP comes out. And I want to ask your humble opinion here, your gut check here. You know, just a few months back, we were looking at payroll prints of the 150, 170 ilk. Now we're looking at a consensus estimate of what? 74,000 added last month. Talk to us about that shift, that change, and are the markets digesting that properly? Is that a precursor to something more notorious here in these markets?
Well, there's two numbers that the Fed has got to watch. One is the number of jobs created, and that has slowed tremendously, and the expectation is that it will continue to do so. But they are also following the unemployment rate, and that is the sign they have for what's happening to the overall economy. If people start losing jobs, they're much more worried. And at this point, it hasn't moved very much or very quickly. The issue is, and Waller brought this up last night, is what is causing this? Is it because we're seeing no entrance into the labor force because immigration's been cut off? Or is it because companies are holding onto workers, which is sort of it's kind of a combination of two is the general consensus, but Waller thinks it's not so much immigration.
I got two questions. First one's important. The unemployment rate right now, the zeitgeist on global Wall Street and particularly Manhattan Wall Street, is anybody modeling out over 5% out there somewhere?
I have not seen over 5%. I have seen 4.5 to 4.6 And that would be considered.
And this is because it's all immigration influenced.
Well, yeah, your denominator would change, and that would make the unemployment rate hold steady if there's nobody entering the labor force. So that's the question: is what's going to happen with the labor force size there? But the Fed is less concerned, Tom, with the overall level than they are with how fast it goes up, because it's when unemployment starts to rise, it starts to rise much more quickly because lots of companies are going to be laying off people because they see a problem in the economy. And that's what we have to keep an eye on.
Okay, nobody cares. All they care about is this is like make a movie. Like we need like Kevin Costner tonight at Fenway. We need James Earl Jones in the stands.
Right.
You know, with the if you build it, they'll come or whatever. Field of Dreams. I mean, are you kidding me, Mike? We got the number one pitcher in baseball showing up, and the Red Sox have joined the Hollywood trade. I don't know how to pronounce his last name. Peyton Toyle? Am I close? The pitcher?
Think you're close. Yeah.
I'm somewhat close. He's second round pick out of TCU. It's like he was playing rookie league earlier in the season. A-ball, double A-ball, triple A. The kid comes in tonight. It's got to be sold out. He's going up against a stud. I mean, it's like the movies, Mike.
I suppose it is, but this is one of the most interesting times of the year for stuff like this. He's actually coming up a little early because it's September 1st when they can expand their rosters. So they're going to see what they got here.
Damien, here's the quote from Ken Rosen. The last pitcher to see such almost as quick a rise is the man he's facing, Paul Skeens. This is like theater.
Well, I think the Red Sox are 2.5 games up on the wild card. I think the Yanks are 2 games up on the wild card. Is that right?
We're chasing the Blue Jays.
But we're not going to catch them. We're looking for one. We're just trying to get a wild card bid here. But I think it's just going to be an interesting. It's going to be an interesting postseason if you have the Blue Jays, the Red Sox, and the Yankees all dueling it out with the Astros, the Tigers.
You know how you can tell. You look at like StubHub and you see what the resale prices are.
Yeah, right. Exactly.
They're going up for all of those teams.
That's exactly right.
At Fenway. The interesting thing about Peyton Toll is that he's 6'6", so he would look Tom right in the eye.
Wow. Yeah, for our audience, Tom is not a small person.
I went to a Dwight Yoakam concert, and I sat directly behind Roger Clemens, and he could barely get in the chair. He's so big. These guys are huge, Mike.
Yeah.
Come in. I did a thing with Derek Jeter and Alec Rodriguez once at the Marriott. They're like my height, but they're twice the size.
Yeah, no, I know.
They're like ginormous.
They're Giancarlo Stanton.
We got 30 seconds. Arnoldus Chapman, best signing ever?
Oh, no. Well, not the best signing ever, but a good signing.
Okay.
We've had,
I would say Babe Ruth was the best signing ever.
Well, you could argue that.
Thank you for that. Okay.
And the worst trade ever.
Lisa, has this been enough baseball talk?
Please.
Okay. Thank you. Michael McKee with the economic.
And Michael Barr's yelling about
Michael Barr's passed out behind the wall there.
What's important here is Damien asks the right question as it moves us on to non-farm payrolls and to inflation. We'll be bringing you that data if we survive Labor Day. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
You're going to pull an auto hood. Damien Sassar with this. This is your wheelhouse as we go into Meera Chandan. Dollar Indian rupiah out to an 88
Indonesian
level.
rupiah. Oh, Indian. Okay, yeah,
I'm looking at India.
Okay.
India, rupiah, whatever.
Okay.
It's gone from 40 to 90. This is a devaluation of a major world's currency, isn't it?
Well, I mean, I think, when you're talking about EM currencies, and that's not Meera Chandan's wheelhouse. I want to be very clear. That. She controls Euro, US dollar, the number one cross on the planet for JPMorgan. That's her wheelhouse. And we're going to ask her about G10 effects, not EM so much.
No,
but,
I understand.
As an extension of what you're saying.
But this is like Trump economics, Trump political theory having a reaction in the market.
No, absolutely right.
Meera Chandan joins us. JPMorgan here as Damien lectures me on the larger currencies. Meera, let's just get to the JPMorgan call. When you synthesize CAS Heisman economics and look at all your work in Europe, strong euro or weak euro?
Definitely stronger. Even from here, we've been calling for a 122 euro dollar forecast on the upside.
122.
Yeah,
I think that's as strong as we've seen here is well. Where is the tariff dynamic now? Are we at nuances and tweaking, or do you anticipate other major announcements into September?
Look, the tariff. We've been in macro markets, been dealing with the tariff announcements and the potential for tariff announcements for almost more than a year now. So I think it's fair to say a lot of the businesses were prepared. A lot of the economists had already baked this into their forecast. What we're seeing now is because the tariff implementation has taken longer than most people had expected, it's been a longer drawn out affair. What you're actually seeing is that the growth forecast had gotten too pessimistic, and now you're actually seeing upside revisions to growth outlook. Obviously, there's more stuff in the pipeline. There's sectoral tariffs that can take a bite out of growth. But as far as we're seeing it right now, it does look like European growth is on a stronger footing. And it's certainly an improvement relative to last year, which is not the same for the U.S.
Meera, I would love nothing more than to ask you about real yield differentials, growth differentials, Fed credibility here with Cook, Euro fiscal spending. But the number one question in my mind is, why is it taking you so long to come on the show here with me and Tom? Because is it the At Any Rate podcast? Because I know it's taking up a lot of your time. By the way, Tom, it is the best. It is a must listen. I mean, every new episode is better
What's
than the
next.
What's
the name of this podcast?
At Any Rate, JPMorgan's podcast. It is an incredible property. Congratulations on that.
Cool.
But now that I have you here, Meera, because I am such a huge fan, I want to ask you about Eurodollar, because at the beginning of this year, you know, it was tough to find anyone calling for a stronger euro. I mean, we were at 102 and many expected the cross to test parity. Today we're at 117. You're calling for 122. We're already up a full 13% year to date, and it's only August, or end of August, I guess. Talk to us a little bit about the call. You know, what's going to drive, Eurodollar to 122 over the near term?
Yeah, I mean, the big game changer, to be fair, at this, in March was the German fiscal U-turn. Before that, if we spoke about the Eurodollar call, I would have said, we'll get tariffs. The Eurozone can't really do anything about it. All we're going to get is ECB rate cuts, and Eurodollar is going to plummet. And it's not really going to fix the growth problem. Now we've got the German fiscal in play. It hasn't even arguably started to hit the numbers yet,
right.
But it is supporting sentiment. So you have a lot of underlying resilience to this trade war, so to speak. Secondly, what we're seeing is that there has been a U.S. catch down story. Now, U.S. grew at 2.8% last year. This year projected to grow, just over 1.5%. Is growth falling off a cliff? No, but it is catching down. Meanwhile, Europe grew at 0.8 last year, and we're thinking closer to 1.5%. So it's about this growth convergence story in a way, and the real yields, aspect. I think it captures a lot of the things that you mentioned. Look, we're looking at 2-year. If you look at shorter tenors, real yields in the U.S., we're at almost 2.5 year lows, and that has happened in part because the market is pricing in a lower Fed terminal, but also inflation expectations have gone up in the front end of the curve. Adjusted for inflation, you are seeing a deterioration in the dollar's fundamentals, which is really the key driver here. And it is suggesting Eurodollar going further, particularly if Fed independence is an issue. The Fed is constrained on what they can do.
Well, Meera, you mentioned real yield differentials, and you really mentioned, how things changed in Germany earlier this year and how that sort of catalyzed your call. But I gotta point your direction in the post-Liberation Day FX hedge flows, right? You've written about this extensively, how dollar hedging from foreign investors into the U.S. equity market has been driving at the margin a lot of what you're seeing in Eurodollar. Is that going to continue? Can it continue? And more importantly, can it accelerate?
Look, we actually, the challenge with the hedge ratios data is that you don't get it on a timely manner. There are some countries that do release it on a timely manner. Like Denmark, for example, we do get this data. It's publicly available. And what we've seen is for the last 3 months, after that initial adjustment in the FX hedge ratio higher, for the last 3 months, they've been basically unchanged. So there is this chatter of, well, have the hedge ratios flows that dried up. I think this is really a result, a consequence of the fact that the dollar's been in a range in recent months as well. We haven't really seen this break lower, weaker in the dollar that people have been calling for. And what that means for the hedgers is that there's no real urgency or catalyst to get them to chase price action if you think the dollar is going to be range.
Meera Chandan with us with JPMorgan this morning. We welcome all of you across the nation. Yeah, we're sliding into the Labor Day weekend, but Meera Chandan's working, no doubt, at the spanking new JPMorgan building. Damian Sassar and I are here with Lisa Mateo and Michael Barr. Good morning on YouTube. We're really pushing this into the autumnal season. From your office, from home, consider YouTube a new digital media. Meera, this is really important, and Damian alerted me to it. That's why he's here. William Harbin and Alexander Weber for Bloomberg have a great chart at this moment. French, Spanish, and Italian inflation comes in below forecast. And all you need to know is there's next to no inflation in Europe. Meera, I want you to synthesize again the global JPMorgan view of China imputing deflation, or at least a trend of disinflation worldwide. How large is that potential for a Chinese deflation to affect our listeners and viewers?
I think it's going to be a dominant factor. And in fact, post-Liberation Day, the biggest, for currencies, we care about differentiation. We care less about things when they're moving the same direction. So with Liberation Day, the biggest source of differentiation that we got among countries was tariffs are universal, that U.S. is applying. It's inflationary for the U.S. It's deflationary for the rest of the world. And I think that's the part that really, became a thorn on dollar's side. Essentially, you have a situation where you've got inflation expectations going up, growth moderating, the Fed in a sticky situation. Should we ease? Should we prioritize growth? Should we prioritize inflation? Yeah. Whereas the central banks outside are getting a deflationary impulse, so inflation is less of a big deal. And in fact, they're doing fiscal policy as well, fiscal spending. So your monetary policy mix is very growth supportive outside of the U.S.
What you just heard there from Meera Chandan, folks, is your conversation for September, October, and into 2026. Damian, I think there's nothing greater than this, and this goes back to Thatcher. Expect the unexpected.
That's right.
I'm looking at bananas. Have you seen beef prices? I mean, we're eating tofu. Lisa, are you having tofu Labor Day weekend? Meera Chandan's eating tofu. No. Okay, you can't afford beef. We're all mental about inflation, and as Damian Sassar and Meera Chandan suggest, disinflation globally is the real story.
Yeah, it is. And for me, just look to emerging markets. And I know it's not your remit, Meera, but I look at emerging markets. In today's chart pack that I just put out, I looked at the 19 major emerging markets, and these central banks have injected 1,475 basis points of stimulus into their markets over the past year alone. Yet 12 of 19 have seen two-year real yields rise over the last year, and 18 of 19 are well in positive territory. I'm talking on a two-year basis. So, we are seeing actually emerging market resilience, if anything, picking up in this environment. Are you surprised about that?
Absolutely. I mean, it makes a lot of sense. And in fact, if you look at more of the fundamental details as well, things like overall indebtedness of the government, the external balances, the current account deficits, the fiscal deficits are in much better shape in EM. The policy mix is more positive, and some of the underlying fundamentals, one could argue, are more positive as well. So look, nobody's overly excited about growth in EM and in Europe. I think the key differentiator here is that US is looking less attractive, and the rest of the world is actually showing resilience and some silver linings.
Meera, are you into the new office yet at JPMorgan?
Meera's in London. She's in London.
You're in London.
Yeah, they pulled her out of the U.S. She used to be U.S. rates, but now she's global FX.
She's global.
Time.
She's global. I can understand. Meera, thank you so much. Don't be a stranger. This is hugely wonderful. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Right now, to get the market open, we're going to go back to economics and talk to someone who's just absolutely exquisite at this. Francis Donald is at the Royal Bank of Canada, RBC. Francis, I've got to migrate and do an audible over to your Canada this morning. Were you surprised by the Canadian economic data amid this trade war?
Well, you might have seen Canadian growth fell sharply in the second quarter, but of course it did. Most economies are still experiencing sizable distortions to the trade war.
Yeah.
Business sentiment was down. Is that a big surprise? And trade data is continuing to produce some very big dislocations globally. So no,
Right.
not a big surprise. What's more of a surprise with Canada is I think on getting into year end, we're going to see some sizable improvements in the Canada story.
Later Q3 into Q4, what part of our economy should our listeners and viewers study? Is it consumption? Is it investment? Something different?
I actually have been surprised how different my own economic presentations have been for clients as we think about where is the U.S. economy. It's been so interesting to me that almost all of the conversations I have are about these big structural trends that are hitting the U.S. and appear to be hitting them in real time. For example, I'm not often asked, what is your non-farm payrolls forecast for next Friday, but what is really happening with the supply side of labor? Are we going to see a labor shortage? I no longer get asked, what specifically, when is the U.S. debt story going to blow up? But what are the implications of high rates on the long side? What are the implications of fiscal policy now maybe dominating monetary policy? And of course, a topic we have talked about many times is, have we really internalized the idea of that K-shaped economy and the institutionalization of high-income Americans just living on a very different economic cycle than low-income Americans? And all these themes together, Tom, have effectively meant that, yes, there's a cyclical economy and we have to pay attention to it, but we're at this nexus between the cyclical economy and the structural economy. And right now in the second half of the year, I think we're going to see a lot of these themes come head to head.
Francis, we've seen this weaker dollar narrative play out, yet, we aren't seeing capital flows into foreign markets out of the U.S. here. I'm curious, if the dollar continues to weaken, or even if it recovers for that matter, what's the story for capital flows? Is there any potential for flows to, I'm talking, when I say capital flows, obviously, I'm talking FDI and portfolio flows. What's the extent to which you can see that sort of, happen?
Yeah, I think you're getting to the core of is the U.S. exceptionalism story still in play? And as Tom noted earlier, we still have some big hits to growth happening outside the United States. What I'm watching for in the U.S. is, are we going to see the productivity start to pick up in a way where American exceptionalism can be reflected in strong CapEx, strong business development, and really seeing those productivity numbers start to rise? I think underlying this whole story is this one big U.S. issue, which is the United States going to see big impacts from tariffs? And that is the outstanding elephant in the room for the American economy. And the global investors have to get over that hump and have more clarity on that before we can call one way or the other, is capital flow going to return meaningfully to the United States?
So what's your sum 12 months forward, nominal and real GDP? To me, it's a huge mystery.
So we have what we call a stagflation light type of outlook, which is growth that is uncomfortably low but not collapsing. So that's between 1% and 2%, Tom. The problem is the inflation side of this picture, which is that we continue to see above 2% inflation, and getting as high in the next 6 months as 3.4 on both the CPI and the PCI number. So you're seeing this phenomenal tension in the U.S. economy. And what worries me about it is that it's not particularly aggressive. It's not pandemic level inflation that calls for a very clear policy response. It's a very nefarious, uncomfortable, muddle through type of environment. And this, I think, is going to continue to dominate a lot of the conversations and make it difficult to say we're early, mid, or late cycle. When you say it's difficult to see, what I hear is that this way of thinking about the economy as being in a business cycle is getting substantially distorted by tariffs, by inequalities, by government spending. And so reading that story is more difficult.
Francis, I want you to describe how you study net exports, the exports leaving America and the imports coming into America. How do you study that back end of the GDP equation?
At this point, by sector, and that's effectively what we're doing for all elements of that GDP equals C plus I plus X. The standard way of looking at the economy is very, very top down. But there's two things happening that mean we have to go much more bottom up than we would have. A is sector by sector, because we're getting these substantial distortions from everything from autos to consumer imports from China. But we also have to do this by consumer segment. I know you said you don't like the K-shaped language, so let's call it instead two Americas. Maybe that's more poetic for you, Tom. We are seeing different consumer behaviors between high-income households and low-income households, and importantly, they're operating on different cycles. So I no longer find it valuable with most headline economic data to say GDP will be at 1.5%. That's not helping companies, and it's not helping markets understand the granularity that's happening, because the truth is that there are sectors that are suffering very deeply in the United States right now. Housing is one of them, trade exposed sectors are another, and there are sectors that are doing phenomenally well and will continue to do so. So sector by sector breakdown, unfortunately, Tom, it's a little more work. We have to work through our lunch breaks.
It's just fascinating, to say the least. Let's leave it there. Frances Donald, thank you so much. You're a trooper to join us here on a Friday. Is it Labor Day in Canada, Frances?
That would be Monday. Yes.
Monday.
Yeah, they get off.
They have Monday.
Yeah,
okay, they're like, oh, I don't know.
I mean, come on. You've never been to Canada before?
I've been to Canada, but not on Labor Day. No, I've never been on Labor Day. Frances Donald, thank you so much. We got to do a panel here in the fall, Frances. Thank you so much. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
At the Coffee Tale Bar at the U.S. Open, it's time. You can order an espresso martini in the morning or the new iced tiramisu. Iced tiramisu. It's made with cold brew, chocolate syrup. How do you pronounce this?
Tiramisu?
Mascarpone? Tiramisu, whatever. Mascarpone?
My goodness.
Yes, mascarpone.
Mascarpone mousse.
Ooh.
Okay.
At this time of the morning, sure.
It's never too late. Okay, the newspapers with Lisa Mateo.
Okay.
Sip of coffee.
This one, okay, while you do that, okay, so this article actually stood out to me. It's from the Wall Street Journal, but it was a really good look into higher prices and how that's affecting because of the cost of tariffs, how they're passing on to consumers. So this was a big thing. They pointed out a few things, right? We saw companies like Hormel Foods, J.M. Smucker, Ace Hardware. They all said they're going to raise their prices. You had retailers like Walmart, Target, Best Buy. They said some of their tariff-related price increases already in place. My daughter came home from a Target run, gave me the receipt. I was surprised. It was a lot larger.
It's all micro. It's a microcosm stuff.
Yeah. And it starts to add up, though. That's the problem. But here's the thing. You have retailers like Dick's Sporting Goods, Victoria's Secret, Dollar General. They're saying that even though the prices are higher, consumers are still buying. And so far. Exactly.
I think there's a big so
but
far
they're
here.
warning how soon you can take that.
I'm looking at the article, as well, and it's all food prices. I mean, are we really seeing price increases at Dick's Sporting Goods and Victoria's Secret? I mean, are we seeing it hit at retail, like real retail, or is it more just, that's where I think they're going to have trouble passing on price increases.
I know we got to go on to the next story, but Liam Denning, folks, I'll retweet it out without question. The essay of the week on Across America, your electric and gas utility bill.
Yep.
Unreal. Yeah. Absolutely unreal. The next one,
Most
please.
definitely.
That was great.
Okay, so this one, my husband will like this because I wake up right at the wee hours of the morning, and sometimes he gets up, mad dash outside, forgets to put out the recycling and the garbage, right? So he rushes out. Yep. But now there is some new technology that could help him and others who have to do that mad dash, self-driving trash receptacles. It is in the works. I'm just letting you know that you could order it on demand like an Uber. It just takes it out to the curb for you, okay? So this is
no. Lisa, I have to chime in here. This is not only real. This is also something that at the golf course at Tamarack Country Club, they have the lawnmowers along the fairway. So they basically have saved so much money by basically getting these AI programmed lawnmowers to just go back and forth. They know how to charge themselves up, come out of the charger, and just, kind of
so it's like the vacuum that does it by itself,
and mow the lawn.
cut the lawn.
So it's the same thing here. And this is even simpler to do. I mean, all you're asking is to take for a trash can to, leave your garage, and go to the end of the curb.
It's a huge problem because we have, a growing garbage crisis.
Tom knows a thing or two about taking the garbage out, right, Tom?
No. Silence.
Take it down the hall.
That's just one of the things that they're doing. And also electric powered garbage trucks, because they're so loud. Sometimes people complain about the noise. So could be on the way. Electric powered garbage trucks too.
Okay.
All right. I want to go to the U.S. Open. Okay.
Please.
Yes, because Naomi Osaka, she advanced, right? But what was actually the star of the U.S. Open are her Labubus. Okay. She had 2 of them. They were blinged out. Okay. They were very, very, and she named them after famous tennis players. Okay. The first one is named Billie Jean Bling. Okay. After Billie Jean King. Red rhinestones all over it. Another Arthur Flash, named after Arthur Ashe. Yes.
Nailed it.
Yes. There you go. Encrusted blue and white rhinestones. Okay, but she is just another one. All the celebrities are having them
on the court.
They're attached to her bag, and each little Labubu has their own little tiny tennis racket. It's the cutest thing ever.
Okay, and this, she's like making these, endorsing these. It's like her.
They're like customized for her. But what it's doing, it's sparking, again, the whole Labubu craze. I mean,
we've gone so far from Stan Smith, Roscoe Tanner.
Well, I mean, all the women are wearing them around their bags, and it's just really...
The new mini ones sold out. They just came out. They're sold out, the mini ones. I'm telling you, it's a craze.
Thank you. Lisa Mateo on the newspapers.
On the Labubus.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.